I'm Maggie Lake, and today I'm talking markets with Marc Chandler, Chief Strategist at Bannockburn Global Forex. Hi, Mark. It's great to see you.
Good to see you, Maggie.
It is really good to see you because for those of you in the chat, you know we've been struggling with the weirdest tech issue we've ever encountered. So we still don't know what was happening, but Mark MacGyvered it and managed to make it. So well done, Mark. Well done.
Thank you.
So, so it's
Still,
your first
still,
time
still
on
a
the
miracle,
show.
huh?
It's your first time on the show, but we go way back to my Reuters days, and you've worked as a strategist and in Forex for a host of investment banks, including Deutsche Bank, HSBC, Brown Brothers, Harriman, for years. So I always appreciate it. I always think you have a really global perspective. So I'm curious, how would you describe this macro backdrop we're in right now?
Yeah, huh? Isn't this like incredible the kind of times we're living in? I mean, uh, President Trump hasn't been in office for well, just almost a month now, and how much the world has changed. It's incredible, I think, and so I think that I think that we've had a series of shocks, right? COVID, Russia's invasion of Ukraine. We have these. The de-risking from China. But I think the biggest risk for investors right now is what's coming out of the U.S. It's the tariffs. It's the pulling out of things like USAID. It's leaving the World Health Organization. I think that this is giving a great sense of insecurity. It's sort of like, there's this ancient Greek who said that if you give him a lever and someplace solid to put his feet, he can move the world. I think the problem we have, all these masters of the universe, is there's no place to put our feet anymore that's solid. Things that we got used to, uh, globalization, encouraging Europe to distance themselves from China, having companies have nearshoring, friendshoring. This was supposed to be the new order, and now we're told that only onshoring really counts.
Yeah. I feel like I think that you bring up a really good point because any of these things and changes and a reevaluation makes sense, right? These things have been in place and maybe things weren't working the way we thought, or maybe some of the changes are needed. A revamping of things is needed, but it's so much so fast in such a condensed period. And we're talking about undoing things that have been in place for decades. So when you take it as a whole, this pace of change just seems really rapid, and we don't know. It's not like we're going from a place that's known to another place that's known. We don't know what that future looks like. So I think it's been really hard. I've talked to so many macro strategists who say, I just don't know. Like, I can't see around the corner. I can't. It could go either way. I just talked to someone last week who said bonds could go either way. It's just impossible to tell right now. There's this real sense of uncertainty. Sometimes there's opportunity in that, which is always what we're trying to kind of thread through. But there's also a lot of risk. So, let's talk about some of those big themes, because it seems like, for one thing, and I think this is really interesting for you and for everyone in your field, it seems like after years of nothing going on really. Once we went to the single currency, there was such dampened volatility in foreign exchange. It seems like I'm hearing from people that they think this is a new era of increased volatility in foreign exchange. There's talk of, a real change in the dollar stature based on everything that's happening. Do you think that we're in a new period where we're going to have to pay a lot more attention to currencies?
Well, I do think we're in a new period for sure, and I do think that the foreign exchange market. This is why I've been able to spend a career in foreign exchange. Average daily turnover, $7.5 trillion. It's just a mind-boggling number because, to put it into context, world trade in a year is only about $35 trillion, which means that in 1 week, we do enough foreign exchange turnover to cover world trade for a year. The world's GDP is like $100 trillion. And so we do that in 3 weeks. And so to me, the foreign exchange market is just the biggest, most liquid of the capital markets. And I do think that many people are concerned about the role of the dollar. And this began even before COVID. In fact, I was at a conference recently in Miami, Trade Tech, and I came across a piece that I shared with the audience. Was 1978, maybe before a lot of your listeners were born. There was an article in Business Week saying that the dollar's role as a reserve currency was ending. 1978. So this is sort of that wall of worry that the dollar has always climbed. But I think that in my work, I sort of think that the open door, this free trade that was sort of institutionalized in things like the World Bank, the IMF, GATT, the General Agreement on Trade and Tariffs, that these institutions really were about how the US was going to compete. We institutionalized this, and that is, we were the strongest, biggest, most efficient economy in the world. So the best thing to do was keep the borders the same as much as possible and compete for everything instead of having these little political concessions. It was first articulated when Europe and Japan were carving out China at the end of the 19th century. And so the US had this open door, which is free trade. And I think that what's happening now is the US is moving away from it. Partly it says that these other countries like China have gamed the system. But when I listen to President Trump, he thinks our biggest rivals, the people that have hurt us the most, are not our enemies like Russia or China, but our friends, our allies. And so a lot of Trump's policies seem to be aimed more at them than Russia or China. And I think if the US, I mean, how to make sense out of Greenland, Panama Canal, Canada becoming a 51st state or whatever that really means. And I think that what this is partly happening is the US is grabbing its sphere of influence.
Mm,
This hemisphere, it says, we want these to make sure we're secure. But the consequence, I think it means we're not going to spend US money or American lives stopping another country from grabbing their sphere of influence. Hence, having Ukraine give up a lot of its territory, maybe 20% of its territory. And basically, I think I heard President Trump say that the war in Ukraine was Ukraine's fault. At the same time, he's reluctant to endorse what President Biden had endorsed, which is the US would come to the defense of Taiwan.
mm.
And so I think this is encouraging other countries then to cut their own deals. If you can't count on the US as your partner, as your back, then you've got to cut your own deals with the local bullies.
Yeah,
I think that's what's
which is
happening.
why it feels like we are in this new period. Now, whether this happens or not, I mean, we're just at the beginning of this, but it does seem
Yeah.
like we're swinging back to something that, we haven't seen in the post World War II era. So, there are all these risks, the risks of the unknown, the what happens with tariffs, really, what gets implemented and what's being said, as we know in Washington, two different things. Inflation doesn't seem to be impacting stocks. We had the S&P 500 hit another record high today. The U.S. equity market seems like it's ignoring all the risks out there. What do you think is underpinning this equity market when you look at what's happening with U.S. assets? I mean, we pose the question: are we setting up for a rotation out of U.S. assets? Certainly doesn't look like it right now. What's your sense of what's happening with U.S. stocks?
And in some ways, US stocks are sort of underperforming. You're right, they're record highs, but we're talking about the S&P up about what, 3 to 4% this year. Uh, I mean, China, I think, is one of the leading stock markets this year, up over
Yeah.
16%. And I think partly, I think it was a big shock to a lot of the sort of mainstream conventional, uh, like worldview, when DeepSeek was unveiled by China. I think the U.S. thought, maybe a bit naively, that we can stop them from developing their high-end technology, or that some people even think that communist countries can't have that creativity. Yet in my work, I find that China is graduating more engineers in a year than the U.S. has. And so I think that the competition has changed. I do think that you're right that the U.S. stock market at record highs, people are looking at valuation. And to me, the problem, and maybe it's because I have so many of these stocks that aren't in part of the Magnificent Seven, that have really underperformed. And so when you really look at the breadth of the U.S. stock market, what's really going on, I want to say like something like 40% of the Russell 2000 are uh, are losing money or disappointing earnings. And so, and from my perspective, so I sit like focus on the foreign exchange market. If you have a basket of international bonds, your currency component could be 2/3 of your return. And if you have a portfolio of international stocks, like many of us have in our 401ks or our retirement plans,
Mm.
the currency could be about a third of the return of an international equity portfolio. So getting the currency right is half the battle or a third of the battle or so. And so I've been suggesting, I mean, in my work, I see that the dollar is very overvalued. In fact, I think there's almost more overvalued than any time I've known you, Maggie, going back to probably sometime a little bit after the Plaza Agreement in
Mm.
1985. Not to say how old either one of us are, but the dollar is very overvalued, and I've been suggesting that our clients and our individuals shift money, diversify away from the US. But instead, what we saw happen last year is Europeans bought a record amount of US stocks. And to me, when anybody's buying a record amount and chasing the market higher, I get concerned. And so I think I think what we have to do is really look for ways to diversify. All of us in the U.S. are really exposed to U.S. stocks through our jobs, through our equity, through our stock that we might own, jobs, our environment. Everything is about U.S. stocks. We tend to be overweighted to the biggest and one of the best performing markets in years. But I think that there's opportunities elsewhere. And I think that, for example, I know a lot of people, maybe you were talking about it as well with the DAX, how well the
Mhm.
German stock market's done. It's not just this year where it's outperforming the US, but in the last 2 years, it's up about 30%, which of course, it doesn't have the tech giants like our Magnificent Seven. But I think there's ways to play this. And it's not just Germany. What I sort of like is looking at, if I'm right about these spheres of influence emerging, then there's going to be interesting opportunities as these new spheres develop. So, for example, in Europe, Poland. Poland is really, I think, an underappreciated, uh, incredible story since the end of communism. Poland is a large country, diversified economy, and its stock market is doing quite well. And I think that going forward, you know, many people might not fully appreciate that Ukraine used to be part of Poland. And Poland looks like Polish construction companies will probably be a big help to rebuilding Ukraine. So I try to think about these kind of themes that are going to emerge. And if I'm right about this spheres of influence, it also means somehow Europe is going to have to develop their own munitions arms industry. France and Italy are particularly strong within Europe, but I think it's going to have to be much bigger and broader. And it means also all the things that it means to have that's manufacturing, it's industry. And so I think that we have to look for like almost like a turnaround situation. I think that between the a deal that the U.S. might cut with Russia over Ukraine, and I think President Trump was saying today he wants to make a big trade deal with China. Europe is going to get uh, marginalized. And I think that its leaders are going to recognize this and increase coordination efforts. Mario Draghi, the former ECB president, former prime minister of Italy, has had a lot of things to say, sort of pushing Europe and greater efforts to coordinate. In some ways, it's a bit like Benjamin Franklin told us as 13 small colonies on the East Coast, fighting the biggest empire at the time. He said, "You either hang together or you hang separately."
Yeah, it's such a
Mm,
great way to think about this. And Paul in the chat just said the Poland
mm,
ETF, EPOL, has the highest return this year than any other country ETF. So that's such a great call out, Mark. And I love the way you're thinking about it, which is if we are entering spheres of influence, who stands to benefit or be the leader, the best in class within that sphere for what is needed, whatever that might be. And you just laid
yeah.
out a great rebuilding story with Europe. How which I think, by the way, is the answer to those who say, "Okay, Europe's cheap. Is it cheap because it stinks?" kind of thing. You know, is it cheap for good
Mm.
reason? And you just laid out the alternative to no, maybe not. Maybe it's just cheap, and there are things to be positive or optimistic about. Talk to me about the German election because you can paint a picture where energy is a real issue with Europe. They've kind of lost their energy base. They've gutted their manufacturing base recently, or it's dependent on energy, and that's a real Achilles heel for them. So, talk to me about
Mm.
the German elections and what that means for Europe. What are you watching there?
Yeah, it's quite, in some ways it's exciting, but in some ways it's going to be, I'm afraid it's going to be more of the same. The current coalition is the Social Democrats, the Greens together. And so it's a minority government right now, is why they have to call this election. And what's likely to result is the CDU, which is Merkel's party, is likely to be in first place. And they're likely to have to form a coalition, and they're likely to form a coalition with the Social Democrats, the SPD. The Greens might be part of that coalition too. But I do think that there's two important things to watch, or maybe three things. One is it's kind of ironic in a way that Vice President Vance and Elon Musk had gone over to when they were in Germany. They both seemed to encourage German people to vote for the far right party, the AfD, and that's been like the kiss of death. The AfD has fallen in the polls, and it's likely to fall sufficiently in the polls where they're not going to have to be taken seriously. That is, where they're not going to be asked to. There's no chance of them being asked to form a new government. That is to say, the CDU and the SPD can form their government without the AFD.
That's interesting. That's a change, isn't it? Because it looked like they had momentum at some point.
Yes, it looked like, I mean, in fact, uh, Merz, who looks like going to be the next chancellor from the CDU, he had tried to pass an immigration bill in the German parliament that was, in effect, going to rely on the AFD support, and he was chastised for it. And then shortly thereafter is when Vance and Musk seemed to endorse the party. And if someone would do that to the United States, imagine that a foreign leader comes to the United States and begins telling us Americans who we should vote for. We'd be very offended. And I think that's what a lot of Germans feel. So regardless of their own political views, I think the fact that foreigners and especially Americans were telling them who to vote for to preserve democracy was seen as a big insult. But
Interesting. It kind of coalesced support maybe when there wasn't any, which who knows whether that was the intended
yeah,
intention all along or whether that was just the effect. But that's really fascinating. So is you see a scenario where you see maybe Europe. They've always once they introduced the currency, they've always had that monetary union, never political, and it's always been their Achilles heel. It's why the sovereign debt crisis was a mess. Everything's by committee. It's been difficult. You see
yeah.
this as the potential of them coming closer, not further apart?
Oh yes, I think that. Well, I think that the U.S. and Russia and China would like to fragment, balkanize Europe, so to speak. But I think that there's a saying in Europe that Europe grows in crisis. And so I think that'll come out of this. And this is also why the German election is important, partly to get past it, but also partly to solidify this idea that Europe is going to have to issue joint bonds again, like they did during the pandemic, like they did during the great financial crisis. And these bonds will probably be used for defense spending, rebuilding their arms. And part of what's going to happen then is, Germany's got this, it's called a debt break, but it's essentially a constitutional amendment forcing allowing only a very small budget deficit. And it seems to me that even the conservatives are really to get rid of that. And so I do think that Europe has to wake up, and I think it will. I think that uh, this pressure, it's like the crisis, this is the most acute crisis in Europe and the U.S. alliance, I think, since the Suez crisis. Remember what happens in '56? Uh, France and Britain invade alongside Israel, invade Egypt, and the U.S. sort of tells them pull out, and uh, and we threaten to sell the British pound to force the British out, who are already struggling to keep their currency pegged to the dollar under Bretton Woods, and we threaten to deny them IMF money. And so the message the UK took away was that the US has the gold, he makes the rules. And I think the French took the opposite stance and they said, you can't trust the Americans. And that's why they pulled out of NATO initially, out of Joint Command.
Mm.
And so I think there's a serious crisis. And Europe, I think, grows in this kind of crisis. And I would look for a greater integration. And I think, that's why I say, point out that Mario Draghi, both his report last year, but also he had a recent op-ed in the Financial Times, really laying out for Europe what they have to do. In some ways, we think about what Europe has. One of the things he pointed out is, you can bring goods across state lines pretty easily in the United States. You can't do it so easily within those states in Europe. So they've got internal tariffs, if you will, that restricts them. And so I think that uh, it's not just President Trump, but for many years, American presidents have been, on one hand, telling Europe to spend more money on defense, and on the other hand, telling them don't build your own army, stay
Mm.
within NATO. And now I think the message is clear. They sort of been given the green light: build your own army, build your own military force. Can't depend on the U.S. anymore.
Yeah, so I guess that means build it not relying on US military companies. I mean, there's some idea that maybe they'll buy from the US. It doesn't seem like that's necessarily the plan, right?
Exactly. I think that, I think you're spot on. I mean, a lot of money that we give, say, to foreign countries for military assistance comes back to us because they want to buy our weapons, partly so they can talk to each other. The weapon systems and
Mm.
computer systems can talk to each other in a way. And so I think Europe is going to build their own missiles, their own weapons. It might take them a few years to like get it going. but I think that's the direction things are going, which is kind of scary, you know. We've been really fortunate our generation. There's been a lot of small wars, but nothing like World War I or World War II for our generation. Here in the U.S., we haven't had a draft
Yep.
for a generation. And I'm afraid that this next generation, between the climate change and these geopolitical things, I think that this good time that we've had is ending and ending quickly. To your point.
Uh, you know, I think that people worry about this. We don't discuss it enough. But certainly anybody who has been listening to Pippa Malmgren, she's been talking about the fact that she thinks the sort of tracks are laid for this already. There's a lot of concern among geopolitical circles. I think you're right, Mark, that we're moving into a much more fraught time and potentially one where there's a lot more hostility. And your point about climate change is really interesting. Programming note, it's not out yet. We will let you all know. Had a really fascinating, we have a new series coming out, and a really fascinating discussion about climate change, not about whether it's happening. It's a completely different take on it. It was really wild, really
Mhm.
alarming. I did it with D Smith. It's a new series we're doing with D. So I'll let you all know when that comes out. But again, a lot of risks on the horizon. So Mark, this really fascinating, completely sort of alternative view than we've been hearing from other people on Europe. What does the euro strengthen in this environment? And do you think that if the dollar's overvalued, do you think that the Trump administration is going to engineer a weaker dollar? We have a lot of people talking about a Mar-a-Lago Accord or something like that. Do you think that this will be intentional and is the result a much stronger euro?
Well, I think that we're still probably in for a further bout of dollar strength. I'm still in the camp that thinks the euro is going to fall through parity, which is a dollar, which we're not that far above, not far above it. We're like a little bit above 104 today. I think that the hard thing about the foreign exchange market, I think, is that my crypto friends are right. It's not backed by gold or silver. It's hard to figure it out where it's going on a day-to-day basis. So I think in the short run, the key is Fed policy. And what this means then is that the Federal Reserve, because the economy still appears to be growing solidly, that is to say, above trend growth, we still have sticky inflation. The Federal Reserve doesn't look like they're going to cut rates here in the first half. On the other hand, many other countries, I'd say the Eurozone, the UK, Canada, Australia, New Zealand, Norway, are all likely to cut rates once or twice still here in the first half, so before the Fed does. And also, I think that if you think of the way the world was organized and the importance of the US, and if the US is pulling out of parts of the world, I think those countries then, the market may demand like a political risk premium. I mean, imagine what would happen if Europe has this, is part of the defense peacekeeping forces in Ukraine and they get attacked, or Russia broadens the attack elsewhere in Eastern Europe, Central Europe. So I think that one cannot be sure anymore, and I think the U.S. military might will also give the dollar some advantage. That's in the short, medium term. I think that when the Federal Reserve begins cutting interest rates again, the dollar will fall. I think that's really the key to the outlook for the dollar, is what the Fed does. I do think, though, that that the shifting sort of tectonic plates are going to help the dollar in the short to medium term. I think the two things they've done well really is the dollar and gold. And I think that many people think that they're opposites or that alternatives for each other. But I think that more money is leaving like Europe to buy gold, or Asia to buy gold, and leaving the U.S. to buy gold. So I'm not convinced of that, and I'm not persuaded though that these tariffs are necessarily good for the dollar. And here's
Mm.
why. I think that the tariff attacks really, leaving aside like what might be wishful thinking, tariffs are attacked on consumption. And those tariffs, the tax can be paid by the local businesses, say the business who's selling us the goods. It could be done, the profit margins could be squeezed by in US companies, where they can pass those costs on to consumers. But I think that the US economy is going to be slowing down, partly because of the tariffs, partly because of the layoffs in Washington and the US government jobs.
Yeah,
And
that's gonna make the numbers messy for some time to come.
yeah, and I'm worried too that what we do with immigration, when you look at, I mean, people don't like to talk about it like this, but the fact of the matter is immigration's been strong in the US and GDP has been helped because of that. You think about what GDP is, what we produce is really a function of how many hours we're working in aggregate and our productivity. So last year, for example, I want to say that foreign-born workers accounted for about three-quarters of the jobs filled on non-farm payrolls. We're going to lose that. And I think we're going to lose the economic momentum. I think we're going to lose innovation. And I think that that's going to weaken the US economy, getting the Federal Reserve to cut rates. I'm still in the camp that thinks the Fed can cut twice this year,
Mm.
maybe once in September and once in December.
Do they do that because the economy's weakening and let inflation run? Does inflation come down because of demand destruction, or do we have a situation where it's that stagflation that people like to ask about, where we're slowing, but inflation remains elevated because of some of the knock-on pressures of tariffs or
Yeah, I don't know. Partly it depends on how the tariffs are rolled out. If they're just like this water torture where it's drip, 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 we don't get a chance to like have a one-off. If it's a one-off, I think the Fed could live with that,
Mm,
especially if is coupled, as you say, with demand destruction. So I think we're going to have a slowing down of the labor market, slowing down of consumption, and that'll get the Federal Reserve to cut rates. And I think inflation's, out of all of our worries, I think that inflation is going to prove to be one of the least of them going forward. And part of that speaks to all these other problems we're going to have. But I do think that over time, we're going to see that some of the things play catch up. And here, I think I take it to heart what some Fed officials point out, and that is that there's two types of prices that the Fed watches, right? Prices they can measure directly, that you can see, like the price of eggs or gasoline, and then there's other prices that they have to interpolate, like owner's equivalent rents.
mm.
And so I think that what the Fed's finding is that those interpolated prices that are the source of inflation now, not the prices that we can actually see.
Yeah. I wanna finish up with
Mm,
China, because we talked about Europe and the potential of Europe, how they might handle the sphere of influence and looking for opportunity. In that area of the world, China has been setting itself up forever with its, initiatives and lending, they've really been trying to expand their reach. Is China Are you optimistic about China? Does China look attractive given that? Or are their real estate and some of their domestic issues so severe that that's going to be a problem for them? Who dominates, or what's the opportunity in that sphere in Asia?
Yeah, maybe to your point, maybe it's not buying China. Like I think I heard someone on CNBC once say recently they want to buy everything in China. But maybe to your point that I mean we have seen house prices, home prices slow the descent, but they're still falling. So maybe it's where China seems to have this incredible technology spur going on. I think about uh, BDY, the auto company that Berkshire Hathaway has a big stake in. I used to think that, of course, in New York, I kind of think a car was just like a tin can on wheels, and then it became became a cell phone on wheels, and now I think that what they're doing is they're combining AI, and it's not just these lithium batteries either, but the big thing I think is going to come that they're going to be showing us more of these solid state batteries. Don't require nearly the amount of rare earths and metals and are easier to change. And so I'm excited about some of these technological changes that China is going to be bringing forward. On the other hand, tough to invest in China because you don't know as Americans what you're really buying when you buy a Chinese company that's listed in the US. Are you really buying a share of that company, or is it just like a paper claim on that company and everything that that means.
Yeah.
But I look at other pockets that are benefiting from the offshoring away from China, like Vietnam, Malaysia. These smaller East Asian countries seem to be benefiting from as China moves production offshore, maybe partly to escape what they have as high wages,
Mm,
but also to avoid the tariffs by moving production. Same way that the U.S. Since I've been alive, the U.S. That's about as far back as the U.S. data goes. U.S. companies don't service foreign demand by exporting.
mm,
That's the old-fashioned answer. That's maybe what the answer Trump wants to come back to. But the real way U.S. companies service foreign demand, building locally, selling locally.
mhm.
So that the sales by local affiliates of U.S. companies are greater than U.S. exports by a huge factor. And we sort of forced Japan to adopt that same model, thinking about like what happened in the early Reagan years, tariffs and the voluntary export restrictions and things on Japanese cars. So they produce a lot of cars here in the U.S. now.
Yeah, all through the Southeast.
Exactly. That's the biggest competition for Detroit. It's not so much Tokyo or Shanghai, but it's the southern part of the U.S. And I think China's being forced to adopt that same thing to get around the protectionist walls, build inside. And I think that the US willing to cut a deal with China is going to just encourage Europe to do the same thing. Allow China to do what Japanese companies were allowed to do. Build say foreign direct investment, build plant and production within Europe, within the US. And I think that some American, of course, it's going to have that stigma to it, but I think that over time, this is really the answer to the exporting challenge that China presents.
Yeah. That seems a little bit more complicated because of some of the other, issues that you mentioned and
Mm.
state involvement in a lot of the firms. But it's really fascinating as we try to sort of game out what's going to happen. Well, Mark, I'm so happy that we were able to resolve our issue and you
Yeah.
were able to join us. I always appreciate the insights you bring.
Thank you, Maggie. Good luck, and good luck to everybody.
Yeah, that's right. We're gonna need it. But I love that you leaned into some of the opportunity because I think that's a great way to think about it as we try to deal with this fast and furious news flow that's coming at us. Thanks for the chat, everyone. You've been fantastic, and thanks for your patience. We will see you again. In the meantime, take care and good luck out there. Appreciate you.